What are these guys doing? How'd you guys get your PhD? Right? Tariffs aren't inflationary. Like, where are you? What are you guys doing? So it's either they're completely and totally stupid, they're checking their brains at the door, or they're completely and totally political and they're going after Trump. But what am I saying is the Fed funds rate should be at 275. And guess what? Lags. It's at least 2 to 3 years of a lag. So even if they started cutting now, you're not going to feel it until late 27. They're late.
You're watching Capital Cause, and my name is Danny. It is May 21st, 2025, and today's guest is none other than Jim Thorne. Jim, thank you so much for making the time to come on the show, my friend.
Nice to see you again, Danny.
Yeah, likewise. Let's go ahead and dive right in here, Jim. From your standpoint, I mean, what do you see out there that should be most pertinent for investors? What should be on investors' radar screen at the moment as the biggest thing possible? I mean, we've got many different things popping off simultaneously, but if you were to pick one, what would it be?
I think the through line under the surface is the fact that President Trump is implementing on a geopolitical stage and also on a domestic stage an economic and a geopolitical framework to basically save the status of the US dollar and US treasuries as the store of value for the global economy, right? As we're chatting, the Genius Act, I think, is about to be passed in the Senate, which basically is putting forth that stable coin bill, which is going to, really wrap the stable coin market, or much like the, in a very loose way, the money market funds, where I think we've talked about this before. We've created demand for short-term U.S. treasuries. Right. And I think that is a very important point. I think when we look at what President Trump has done in the Middle East, I think the unwritten agreement and what he did, and I think the speech he gave in Saudi Arabia was historic. But I think the knock-on effect of that is that, the United States is no longer into nation building. And I think personally, the quid pro quo on that's going to be that OPEC is going to trade oil in US dollars and recycle the excesses back into the U.S. Treasury, which is, petrodollar 2.0. So I think that's very interesting. And I think the big, beautiful bill, I think everybody's getting their knickers in a knot, but really what it's doing is it's, shifting economic policy and the focus from a Keynesian point of view, which would be MIT, Princeton, Yale, back to a libertarian point of view, or a supply side economics point of view, or a la University of Chicago. And supply side is let's deregulate the top of the supply, and therefore we can get non-inflationary growth. Let's make the environment good for capital formation and creation. So you take all of that and you sit there and you go, what we're really trying to do, what we need to do is create an environment where the debt is sustainable in the United States. And then we can create an environment where nominal GDP is a little bit higher than inflation, and inflation is a little bit higher than the Fed funds rate. And then we can grow our way out of it. Danny, we're in a period of financial repression. And, the only way we can get out of this debt mess is, there's two ways. One is grow our way out of it, which is, I think, what President Trump is trying to set the table for. Or we have war, right? And then what we do is we wipe out all the excess capacity in the global economy, wipe out all the debt, and we rebuild from 1945 on. So very interesting times. I think he's doing it step by step. I think he knows exactly what he's doing. I think a peace dividend is coming. And, I think the interesting aspect, if I'm right about what's happening in the Middle East with the US dollar, the other aspect of this is going to be China's going to be cornered. Because I think it's early in July, the BRICS meet in Brazil. And I think on the agenda is, de-dollarization. And I think if OPEC starts to basically say we're not going to, Saudi Arabia is going to say, we're going to trade in US dollars, China, right? Then it really puts China back into a corner in terms of they need to come to the table and negotiate with the United States in terms of a trade deal. So I think he's very provocative, President Trump, and what he's doing. I think Scott Bessent knows exactly what's going on. And so, the yields, the yields have been trading sideways for almost 2.5, 3 years. I don't see a break to the upside. Yes, Japan is crazy, breaking to the upside. They have to, I mean, the Bank of Japan thinking that they can raise rates is just delusional. And then on the other side of the coin, you go to Europe and you look at Swiss, and the Swiss 2 years negative, right? Look at the Chinese yields are close to 1%. So you've got this delusionary view in some areas of the world. Let's say the Bank of Japan and the Fed, for example, that think that this society and our global economy can handle these extreme rates. And I just don't see that happening. So I see rates starting to come down in the very near future.
And you have rates on the U.S. side at an R-star level of 2.75, I believe was the number you referenced last time. Is that still the case?
Yes. So it's, and all I'm doing is I'm going off the New York Fed model. And, the R-star in Europe is negative, according to the New York Fed model. So, it's about, real rates are about 75 beeps. You add 2% for inflation and you get 275. I am not into this camp that we're in this new inflationary environment. I think, the Fed has grasped defeat from the jaws of victory. They've tightened way too much, way too long. And we're going back to a disinflationary environment. And, most likely Powell will be long gone. But, let's be frank, he's turning into, he was, the chatter was that, he was worried about his legacy. He may go down as one of the worst Fed chairs ever. He's that bad. That FOMC is that bad. It's that bad. They just don't understand basic economics. So, let's see what happens. But I've just never seen an FOMC that has been so lacking of nuance or basic economic theory as this current one right now.
And what kind of Fed chair do you anticipate Trump putting in his place in 2026 when his seat comes up for a bid?
Well, I think, I hope it's a mixture, right? I hope we get somebody. So Ben Bernanke, and when we look at Alan Greenspan, what the great thing about Greenspan was he was a balance between economic theory and Wall Street experience, right? You had that balance. And then we went to Bernanke, and Bernanke was all academic, all Keynesian. That's what this Fed that we're experiencing right now is Bernanke's monster. Okay. He gets in and he pivots to Keynesian theory, or the theory that was, Stanley Fischer, MIT, Princeton, and Yale. And so we need to get back, and we need to have somebody that understands, a great guy would be Bessent, would be a great Fed chair. Somebody that understands history, somebody that understands basic economics, but also somebody that understands the markets. And, Powell just does not have, he just seems to be incompetent. He's over his skis.
Even though he's not an academic, he's a private equity guy, right?
Yeah. And so you would think that players on the Fed, like Williams, like Waller, right, some of the PhD folks would help him out. And, like just basic stuff, Danny, like rate hikes are inflationary when you take into consideration credit and supply side effects. That's third year macro, right? These guys are, they can't even apply third year macroeconomics, right? Short-term inflationary expectations. Nobody in economics looks at short-term inflationary expectations, even if it's from the University of Michigan, where you've got extreme bias because of Democrats. Why? Because short-term inflationary expectations are wrong. That's like first-year econometrics. Like I don't even have to go into thesis stuff. I don't even have to go into, this is like basic undergrad stuff. and I don't know what they're doing. So you either sit there and say he's got Trump derangement syndrome, or he's totally incompetent. I don't know. Pick one. But to sit there and have, Target come out with the numbers they had today, to sit there and come out with, everybody freaking out, the Moody's downgrade, when they sat and were quiet while Yellen and Bernard, both 2 senior Fed official, 1 Fed chair and 1 Fed vice chair, spent like drunken sailors, and they said nothing. Okay, now he's confused and he doesn't know because the world's uncertain. Well, I'm sorry, Mr. Powell, the world's always been uncertain. You don't recognize the fact that lags are between 2 to 4 years in terms of monetary policy. You're excessively too tight. And oh, by the way, you're adding to the financial instability globally. I mean, this is third year macro. And this is coming from the guy that's running the preeminent central bank institution of the world. We should demand better. It's a joke. It's an absolute, and the Wall Street guys just yammer on it. And then, MSN, I don't know what, MSN is, now they're finally waking up to the fact that President Biden had dementia. When are they going to wake up to the fact that Powell has no clue and the FOMC has no clue? Basic economic tenets are just ignoring. So I don't know. So as a researcher, I have a PhD in fundamental economics, right? Yeah, I know they're anchoring off of this ISLM model. Hey, let's teach third year economics where we introduce credit rationing and supply side effects. And oh my gosh, guess what? Rate hikes are inflationary. And if you take out shelter, which is where the inflation is manifested, you're significantly below target. And then you sit there and go, the labor force is strong. Look at long-term unemployment. It's rising continually. Folks that are unemployed or greater than 27 weeks is continuing to rise. So I do not know what they're smoking at the FOMC, but I cannot believe with all their PhDs that we couldn't have a frank, fundamental conversation about what is really going on, as opposed to sitting there and just gaslighting the world with their speeches, right? It's just a joke.
Right. And can Trump remove Powell, like from a logistical standpoint? Can Powell be removed before 2026?
I don't think so. It's because it's cause, right? So no, unless, you can't fire a Fed chair because they're incompetent, right? Unfortunately,
because of the intended independence of the Fed. That's
but look, this is, and I got to be. I don't look. Let's look. This is a hard job. We are in a very difficult period of time, right? Look, the new head of the Cleveland Fed. She's a trader. She worked at Goldman. She's really smart. No graduate school expertise in economics. Okay. The individual who's up for vice chair of supervision, a very powerful spot, undergraduate degree in advertising and a law degree. Okay. Why don't we treat the Fed like the Supreme Court and put subject matter experts on there as opposed to bureaucrats? Okay. And that's what this thing is morphed into. The head of the Dallas Fed's a lifer at the Fed, right? I can go through. You can look at, and I'm not going to get into, just look at the composition. Turning Katz. Could they pass a field exam in macroeconomics at the graduate school level? No. Kashkari is an MBA. Smart man. This is the preeminent central banking economic institution. It's been politicized. We've got too many bureaucrats making decisions and they have no clue about what they're doing. I don't know who decided on what. I don't know. but they did. And they're making massive mistakes. And what is their response? We're going to go around and have town halls. We're going to have PowerPoint presentations. Really? That's our move.
You're looking for great deals on gold and silver, coins and bars from a company that you can trust, then you've got to check out the good folks over at Pimbex. This year, I've really gotten to know these guys, and all I can say is you're not going to deal with a better group of people. They're a family-owned gold and silver online bullion company offering the essentials and more at industry-leading prices while always providing first-class top-tier service. That's PIMBEX.com. And if you're looking to convert some or all of your retirement account into real gold and silver, give Pimbex a call. They'll help explain the process and get you started on the right path. Your support at Pimbex also helps support the channel. So reach out to Pimbex today. You won't be disappointed. And make sure to tell them Danny sent you.
That's what we got.
Sounds
From the
exhilarating.
United States of America, the Federal Reserve, the preeminent central bank of the world, is a shadow of its former self.
Now, they seemingly win, the Fed that is, they seemingly win in opposition to the Biden administration, for the last 4 years that Biden was president. And at the same time, they're in seeming opposition against the Trump administration. Is there a chance Trump actually does want higher for longer? Is there a reason, could this all be kabuki theater, this feud between Trump and Powell to get Powell cover to keep rates high, or is there really no feasible path for why Trump would want higher rates?
So my whole thesis has been, and I know I pushed pretty hard on the Fed, but my whole thesis from the get-go is this: their communication strategy and the way they are talking is that they are at neutral right now. And they're not. So all I'm trying to do, and I'm guess like I'm the lone wolf on Wall Street, really waiting to say this, is, hey guys, you're not at our star. You're at 433 and you got QT. So why don't you stop QT, stop contracting the balance sheet, and aggressively get to 275, and then we'll stop, and then we can be patient and we can hang out, right? But time and again, there is no justification for why they are this far above our star. And they sit there and they go, short-term inflationary expectations. Well, that's bunk. And before Powell got into power, what we used was the five-year forwards as inflationary expectations. And it's at a historical average. And it's been there throughout this. Look, another basic economic theory that the Fed ignored. I guess they're writing all this new theory as we go, flying by the seat of their pants, right? Rate hikes do not fix supply shocks. COVID was a supply shock. Powell has been hammering the interest rate sensitive area of the economy, and that was not the cause of inflation. COVID was, and then you had the Biden administration going on this modern monetary theory. Okay, right? Deficits don't matter. Okay, well, guess what? Raising rates and bombing the private sector doesn't fix this.
Right.
Okay.
And I have the M2 money supply chart up here. And as you can tell, you had this huge spike up in 2020 where you had this massive inflection point on the graph where you pretty much had a shift in the rate of change as it relates to the M2 money supply. And this is I believe they release these numbers every quarter. So yeah, this massive price shock to the upside on money supply. And from 2022 all the way out until late 2023, you were seeing contraction of the money supply. But since then, since September of 2023, you're back at pretty much all-time highs as it relates to the M2 money supply. Is this a cause for concern from a demand side inflation standpoint?
Well, it's the rate of change, right? It's a change in money supply. And if you look at that point, that in the part in the chart where it went parabolic, you got to add the fact that they increased money supply about $4.5 trillion. And at the same point in time, they shut down the supply chain and they paid people not to work. Mm-hmm. Right. And so you had this weird supply shock that was indeed inflationary But look at they're just ignoring it. Blinder did work out of the 1980s, but they would have done nothing. And just done a counterfactual study. If they would have done nothing and the supply shock dissipated, guess what would happen? Inflation would go away. What's happening now? What's the number one driver of inflation? Shelter. What's that caused by? High rates. People don't want to put supply on, right? People don't want to build, right? I mean, this is basic economics. See, even up here, the same thing. I mean, shelter is the largest component in Canada. I mean, this is basic economics, man. That's the thing. And why people are trading this basic nuanced third year macro term or theory as radioactive material is beyond me. This is the stuff that the Fed should, Powell, instead of giving the gobbledygook that he does everything, and we've become apathetic and just turned them off, right? She should be instilling confidence that he knows what the hell's going on. I mean, this is serious business, right? And he's just a lightweight. He's just an economic lightweight as far as I'm concerned. And I like the guy. But my gosh, I mean, the last year, he's been pathetic. And it's completely, and I don't know what the heck Waller is thinking about, or Goolsbee. I mean, Goolsbee's from Chicago. I mean, what are these guys doing? How'd you guys get your PhD? Right? Tariffs aren't inflationary. Like, where are you? What are you guys doing? So it's either they're completely and totally stupid, they're checking their brains at the door, or they're completely and totally political and they're going after Trump. But what am I saying is that the Fed funds rate should be at 275. And guess what? Lags. It's at least 2 to 3 years of a lag. So even if they started cutting now, you're not going to feel it until late 27. They're late. They have learned nothing. And after the global financial crisis, they went around the country for years on these town halls and PowerPoint presentations and kumbayas. We had learned our lesson. No, you haven't, guys. You are as bad as the previous crew.
Now, if things stay the way that they are, what is the natural conclusion to things? Will these higher rates produce a recession, economic weakness of some sort? What can we anticipate if the Fed does not change course?
No, financial crisis. They own it. Jay Powell owns if we have a financial crisis, Jay Powell owns it. And remember, God bless her soul, the Queen, after the global financial crisis, she went to all these central bankers and said, how did we get this so wrong? And that's when they scurried off and did the bureaucratic thing and had PowerPoint presentations and kumbaya meetings. We're going to have a financial crisis and Powell's going to own it. And he's going to walk and Wall Street's going to give him the cover saying, we didn't know. Well, so why am I amplifying it? Because I get an opportunity to express it. All I'm doing is I'm giving you, if I was back and we're talking in our class, talking third year macro or fourth year central banking, right? And we were analyzing. Somebody reached out to me the other day who teaches high school economics. High school economics students know more than these guys do. This is how pathetic these guys are going. It's a clown show.
Why are there so many IYIs? I mean, it's a term that Nassim Taleb coined, intellectual yet idiots in these positions.
Think about the environment that we're in. I'm trying to sit there and say diplomat. Maybe there's a lot of people that are on the FOMC that are over their skis. I wish the FOMC was like the Supreme Court. I may not agree with the Supreme Court decisions of one justice of another to another. Do you understand? There's one thing I know for sure. All of the members of the Supreme Court know constitutional law cold. Do you know what I mean? They're really smart and they are subject matter experts. Now I can disagree and sit there and go, I disagree with your interpretation, but I know what they know. My problem is I'm losing respect as an economist towards the FOMC, right? I don't think they're subject matter experts. why they are where they are, why you have somebody that doesn't have a PhD that's going to be the head of supervisory of the Fed, an undergraduate degree in advertising and a law degree. I was accepted to law school. I'm not saying they're not smart people. A lawyer isn't an economist. Okay? I mean, it's basic stuff, man. They don't know the theory. They don't know the basic theory. And for all those thousands of economists at the Fed, shame on you, the PhDs, shame on you. This is going down on your watch. Used to be that when you worked at the Fed and you came out, it was a position of nobility. No longer is that the case.
Now, we do have several trillions of dollars to be rolled over in interest payments. How do you anticipate that being rolled over at current yield, at the current interest rate?
Well, they can't. I mean, what would the deficit look like if interest rates were at our start? So this is where you really ask yourself, what is Powell doing? You could easily paint a political narrative to it.
So if they can't roll them over, at this rate, at this level, what do they do then?
They got to get rates down. Like, this is serious. Like, this is back of the envelope. This isn't kabuki theater.
So it's got to be soon. They've got to do pretty quick.
Darn tootin'. That's why you think I'm yelling at everybody. I'm clarion call. I'm sitting here banging pots and pans, right? I mean, I don't know what they're doing. It's a shame. But look, let's look at some stuff, right? If I'm right on the recycling, if the petrodollar system still works, there's demand. If we get the Genius Act for the stable coins, there's demand. And if we get deregulation of the banking system, where the supplemental leverage ratio, the SLR, the legislation or the regulation around that allows banks to go back and trade on their own account. Pardon me, a la pre-Dodd-Frank, where they can take those trillions of dollars that are sitting at the Fed earning 4.25% and go and use that capital to provide demand in the credit market. We've got lots of demand there, right? And so to me, there are solutions being put in place, but you really have to wonder about the sincerity of the Fed towards their view about contributing to financial instability in the global economy. And the Fed owns this. The Fed, if you and I were there, they have enough evidence to cut rates if they want to. Would it be controversial? Of course it would.
Why is the Bank of Japan following their lead? Why are there other central banks following their lead?
Every time I do not know. Look, and I don't know this answer, but I don't know why these guys do this. The Bank of Japan periodically since the early 1990s has felt that they have beaten deflation, and they're wrong. And every time they get to the point where they get a little bit of inflation, they tighten and they screw it up. This is like the fifth time. I don't know why the Bank of Japan thinks that they've defeated deflation. There's nothing new here. You understand? And this is the bizarre part about this. If you just go back for a little bit of an editorial comment, Bernanke knows this. Bernanke's an expert on Japan and deflation. He knows this hasn't been solved. So why is he sitting around the Fed and all these? I know, there's a symposium at the Fed the other day, and he was right there. Why isn't he saying anything about this? He knows what's happening. He knows that if we screw this up or go back to deflation, the Swiss 2 years already below is zero. There's deflation already in Switzerland. There's deflation in China, right? Month over month up here in Canada, we had a negative print, right? So I have, one could easily say, and I'm not painting the scenario, but boy, oh boy, you really have to wonder about the sincerity of these folks that are at central banks and their willingness to whistle by the graveyard when one of the extreme consequences could be a financial crisis, right?
Yep. Doesn't Europe, doesn't Japan risk seeing a financial crisis before the United States does? As somewhat grim as the outlook might be, given the higher rates here stateside, it's much more grim under Europe, under Japan, under so many other countries as well.
Well, that's the it's called the Trumpin dilemma, right? Is the central bank of the United States the central bank of the world, or the central bank of the United States? Do the Americans want? My dad's American. I worked there for 25 years. My kids are American, but I'm just going to say, I'm trying to be like a global investor. Do the Americans still want the dollar to have dollar hegemony? Do they still want the dollar to be the medium of exchange of the global economy? Then there comes responsibilities with that. Okay. And for them to ignore the fact and the data, and Reinhardt did this before they did their wonderful work on the fact that when you get debt to GDP over 100%, you get deflation, which is where we are in the United States. They did another paper looking back at what happens when the United States tightens. What happens? The paper is called Capital Flow Bonanza. They went back in history. You know what the result of that is? The financial crisis starts outside of the United States. Right? In the 90s, it was the Asian contagion. Earlier, it was the Mexican pesos crisis, right? You had Russia defaulting. Where are we right now? Where we are is the Fed is turning a blind eye, and things could break loose elsewhere in the world. And if the Fed wants to have the mantle of central banker of the world, then you should think about the consequences. And here's the other thing that always happens. These central bankers, they think that the global economy is not interdependent. And so what happened with the peso crisis, or what happened when Soros, it's funny, Soros and Druckenmiller and Besant, they attacked the Hong Kong peg in the late 90s. And what was the long-term effect of that? Well, we got the Thai baht, we got the Asian crisis, worked its way all around the world. Russia defaulted, and 5 prime brokers on Wall Street almost blew up and were taken down. The long-term capital management crisis, okay? Or what did we do? Wall Street blindly lent to 3 Nobel Prize winners tons of capital, because they were playing some arb play on Russian sovereign debt, and it went the wrong way. It will end up on our shores. And, it might not be 25, might be 26 or 27, but I would suggest to you, and I'll say this, living in Washington, D.C., Powell will be sailing by himself on the Chesapeake Bay when this happens, and it'll be a total shame. Where is Yellen being held accountable for this shenanigans that is going on with the debt? Where is Bernard? Where are all these hunter killers, these masters of the universe? Where are all these Keynesians, right, that are basically walked us into a financial crisis? Why didn't Yellen term out the debt when we had 0% interest, right? Why didn't she do this? Why didn't she look forward, right? And you're going to blame Trump on this? It's a joke.
Yeah. Well, let's go ahead and shift over while we still have time here, Jim. I want to take a look at the Bitcoin price, and reason being, we don't cover much Bitcoin on this channel, but you were, I believe you did call for a pretty big rally on Bitcoin as a result of the Trump administration's policies. And here we are, and we're at 107 right now. By the time this video gets out, it could be well above that. But we did hit an all-time high at 109. Did we hit 110? I'm not quite sure. Maybe we did. Maybe we didn't. But at any rate, we are hitting all-time highs in Bitcoin. Bitcoin is often viewed as the liquidity indicator to the market. What can we surmise? What can we pull? What insights can we pull from this Bitcoin and crypto rally? Is this a positive sign for the markets in general?
Well, if you after we just sat there and hammered the Fed for for an extended period of time,
Yep.
if we avert a financial crisis and they cut like they should, then we have an environment where we have slowing growth and an increased liquidity into the global system, right? What asset classes work that appreciate when you have an increase in liquidity? This is even before all the regulatory stuff that's going on. And the history says, right, well, what do you want to do? You want to buy companies that aren't that cyclical. Well, that's secular growth. What's that? That's Tesla. That's NVIDIA. That's AI. Well, what else is that? What else is there, right? Well, it's Bitcoin. Why? Because Bitcoin manifests. It doesn't have any cyclical exposure, and it basically it's a liquidity play for some people, and that's how this thing traded the last couple of Bitcoin halving cycles before we're getting the legislative clarity that we are right now with the Genius Act and the fact that when you think about it, the new head of the SEC is pro Bitcoin, pro digital assets, pro tokenization of real world assets. So we're in this new regulatory environment that is pro Bitcoin, and Trump said he's pro Bitcoin. So I look at this as we touched on this earlier, is, you know, you've got to do something to save the franchise, which is the U.S. dollar and U.S. treasuries. And what Yellen and Biden did during the Ukraine war, when they went into SWIFT and they attacked, you know, Russian central bank holdings, and then they went after Russian interest on U.S. treasuries. Why would anybody want to buy U.S. dollars? Why would anybody want to buy U.S. treasuries that not in the United States? They've got to do something. So you need a neutral currency, whether it's gold or Bitcoin. So everything sets up for this to happen. And, you know, we're just going back to Bretton Woods. Like, something's got to back U.S. dollars, right? The charade of fiat money, given the shenanigans that's gone on in Washington for all the world to see. I mean, now mainstream media is waking up to what happened with the charade of President Biden. I mean, we all saw it, right?
Oh yeah.
And so I don't know. Pretend you're living outside the United States. I beg your pardon?
No, I was just mocking the mainstream media. Like, what? He has dementia? Who could have seen this coming?
Who could have seen this coming? Right? And so my it's a new asset class that has perfect scarcity. And so everything is setting up. The way we get out of this is, and I'm not the first one. Like, you know, Paul Ryan wrote a wonderful op-ed in the Wall Street Journal last summer. And, you know, again, let's get back to the era where we can agree and disagree on policy, right? And this is one thing that I agree with the ex-speaker of the House, Mr. Ryan, is the solution to the debt crisis is stablecoin and Bitcoin, right? It's a massive solution. So I look at this, and I'm going to use my experience in the 90s, where I still think Bitcoin is underowned in Wall Street. I think people still think it's a scam. I think the evolution of Bitcoin has been stifled by Choke Point 2.0, which, oh, by the way, the Fed was involved in. And, you know, Genslinger, the head of the SEC, who basically stifled innovation. Danny, one of the things I learned going through previous cycles is they can stifle the regulatory aspect of this. We can dislike an asset class, you know, because we think it's too expensive or this or that. But you know what? Innovation continues. And even though blockchain has been suppressed for 4 years, businesses have been working very hard to implement this new internet to build a brand new backbone for the global digital economy, because the internet that you and I are communicating on right now was never designed to be the backbone of the global economy. Never. It was designed to be a backup communication system in the 50s in case of nuclear war. So the suggestion is that the first area that we're going to see blockchain really be implemented is in the financial services industry. And I would suggest you tokenization is going to be there. ICE, who owns the New York Stock Exchange, they have about a 50% ownership in T0, which has a platform that's ready for digital assets, SEC approved, superstar board. And oh, by the way, the new head of the SEC was on its advisory board. So we're going to go to tokenization, which is going to reduce the capital requirements. We're going to finally get a new financial system, trading system, that we haven't had since the early 1970s. So it's very exciting. It really is. There's a lot of stuff that's going on. And the beautiful thing about capitalism is you can regulate it, you can slow it, but entrepreneurs that take the long view will continue to implement their business policies, right? People thought that Amazon was a scam in 2002. You know what I mean? You know what I'm saying? Google, who's going to use the internet? Who's going to basically shop on the internet? You know what I mean?
Yeah.
And so, but
it's shades of the past. I want to ask you one more question before we wrap up here, Jim. Didn't mean to cut you off, but what about gold? What role will gold have in the new system?
Gold has a critical role. The only reason I don't like charts, right? Gold needs to rest and digest. So just like Bitcoin went too fast after the presidential election, it's digested for a couple of months. I think gold just needs to digest. I think by the end of the cycle, it's going to be north of $5,000 an ounce. It's a must. It's a must own in your portfolio. Having said that, though, if you and I had $100 to put in the portfolio right now, I'd buy Bitcoin over gold, because Bitcoin has digested, traded sideways, looks so much better technically, and Bitcoin will run and gold will digest. So for those that don't have enough, I would use a period of time between now and, let's say, Labor Day to use any weakness to buy. But I think gold trades between 33,000 and 3,500 for a couple of months for the summer.
Okay. And you mentioned 5,000 at the end of the cycle. What's the duration here? What's the duration of a typical gold cycle?
When I say to the end of 28. That's where I'm going. Okay. I think I can go much higher. I think it goes much, much higher by the end of the decade. So same thing with Bitcoin. I think that the genie's out of the bottle. I think people are fed up with the fiat currency. I think people are fed up with irresponsible spending from governments. Nobody's buying their narrative anymore. So, and that's really difficult when you've got a system that's based on trust. So how do you get trust back into the system? Let's get gold back in the system. Let's get Bitcoin back in the system. Let's build some trust back in the system. And as opposed to, what Yellen and Bernard did in terms of the fiscal irresponsibility has set the United States back. It wasn't Biden. Biden wasn't cognitively there. Okay. It was Yellen and Bernard that did it. They own it. Those are two ex-central bankers. And so we need to get confidence back in the system. And unfortunately, it's weird, because when you rereading Greenspan's memoir, he said that we were going to when he retired, he said we were going to reach to this point. And I remember reading it saying, you got to be kidding me, where, people really questioned the role of the Fed. Not, people have always questioned the role, but I mean, the common man are really fed up with what these central bankers are doing. And they really need to start recognizing the fact that they've got to get their head out of this echo chamber that they're in. And when Target misses and when sales are going down, to sit there and say that the economy is strong is so disingenuous. It's so disingenuous when people in the real world, in the private sector, are getting hammered by their irresponsible, their their reckless and dangerous policies.
Yeah. Well, I can't think of a better place to cap things off than at that point. Jim, anything else you want to talk about before we sign off here?
No, I think I'm good.
All right. Well, Jim, where can people find you if they want to hear and see more of your work?
Yeah, I'm on X, Dr. J Strategy if you want conscious stream of thought of, on a daily basis. I typically write something once a month that I post it there. You can read my points of view. And if you would go back and read what I've been writing about for the last 3 years, nothing that I have said is new. I might be a little bit more emphatic now because I think it's getting really dangerous that the Fed isn't really doing something that is, shall we say, an adult would do, right? And realize the danger that's going on. But having said that, yeah, that's what I do. Communicate or contact us at wellingtonaltus.ca.
All right. We will have the links to your X as well as Wellington Arctis at ca.ca down below as well for people that are interested. Be sure to check them out, guys. Guys, if you got value out of this podcast, drop us a like and comment "Go Jim Go" in the comments section. If you disagree with anything, that's fine too, but let me know why you disagreed. I do indeed read the comments. So let me know your thoughts, good or bad. Always interested in getting your perspective here, guys. Subscribe to the channel so you don't miss an episode. Liking, subscribing, commenting, all of it goes a long way in helping support the channel and this video and pushing us in the YouTube algorithm. So much appreciated, guys. Also, check out our good sponsors down below. 10% off the Gerald Celente Trends Journal, $1,000 off Chris McIntosh's Capitalist Exploits newsletter. It's my favorite newsletter out there. I've been using them for over 5 years, and I stand by them. And then we have a whole host of other cool products that you can play around with to support the channel as well. Check out the Substack at capitalcosm.substack.com to get early access, ad-free versions, and uncensored versions of all of my videos for the ones that warrant it. All right, guys. Thanks for watching. See ya.